but we're also looking at the collapse of 700 years of bond issuance dating back to the Middle Ages, the collapse of that bond market, and the first rise in overall worldwide bond rates, concerted rise in 700 years, or any sort of debt rate in 700 years. So this is a much bigger cycle as well when you're looking at it from a debt perspective. So it's the reset. It's basically the reset. This is going to be a sort of a violent stage and a working out of a transition into this more AI and technology driven economy. But debt's got to be cleared out. Jobs have got to be lost. Currencies have got to crash. I will also say this, a feature of the digital system is coming as they want to get rid of bonds permanently. So because it's a limitation on the system, the debt model is going to change. So when I say the 700-year bond market is going to collapse, it's the collapse of an asset class that's not going to come back the same way ever. And that is, by the way, by design. Very interesting that Christine Lagarde came out and said that these fiat currencies are weakening, that she thinks the dollar is going to weaken long term, and that gold is really, she says it's not Bitcoin, it's gold. They know, I'm telling you, the central bankers know it's gold, not the private currencies. And they're going to capitalize their digital systems with gold. Christine Lagarde gave the plan out. They know. She's a central banker. They know what's coming. They're going to recapitalize with these assets, and they're going to push us into digital currencies.
You're watching CapitalCosm. My name is Danny. It is November 24th, 2025, and my guest today is a huge fan favorite by the name of Rob Kientz. Rob, thank you so much for coming on, my friend.
Danny, once again, thank you for letting me come on your channel.
Yeah, it's always a pleasure, man. Let's go ahead and dive right into the nitty-gritty here. Everything's kind of moving sideways. Nothing really too exciting. It's kind of been a slow couple of weeks here in the metal space, in the markets. The markets have been moving a little down. It's really tough to get like some really good, interesting news items. But I think you might have some interesting stuff that we can talk about on this program. Go ahead and take it away, Rob.
Yeah, so we'll start with the economic. You and I talked about a couple of things. I want to talk a little bit about economic and explain what you just said and why that's the case. And then we can roll in some of the surveillance and digital ID if you like. From the economic standpoint, what I'm seeing is a sideways trade in the gold market. Now, there was a Saxo Bank analyst that came out, and I did a video on this last week on my channel. And he was saying that gold is building a base for a much higher move in 2026. So we've got Saxo Bank, JP Morgan, Bank of America, and TD Securities as major investment houses all jumping on the gold bandwagon. And I'm seeing a lot of chatter in the mainstream media about gold now. There's this concept, and I was reading an article on CNBC today, mainstream financial media, 60-20-20 portfolio, of which 20% is now gold as the choice asset. So I think gold and silver, or gold in particular, are becoming really interesting to the main financial houses. And also, if you look at the COMEX futures positioning, the ones that are holding up the gold end on these futures positions are the other reportables, which are like wealthy family offices, large investors, and then the financial houses. So the big financial houses, like if you're investing your money with Schwab or any of these types of guys, those guys, financial houses, hedge funds, are now investing in gold. And that's holding up the gold market where it is. You still have a lot of massive shorting done by the banks, but I think there's repositioning. And I think what's happening is you've had this huge move into gold, and people are paused right now because, one, it's a derivative trade. It's not a physical trade determining the price, and people got to reposition for the new year. We're coming up on December. Physically, gold demand is at record highs, silver as well, but that's not where the short-term price is. But people are looking at things like the repositioning on a futures market, and they're looking in the meantime about what's going on with the Fed. And the Fed there's this rift in the Fed right now. Half of the governors want to ease. They want to print money, and they want to lower interest rates. The other half of the governors are like, no, let's hold. Because what they're looking at is the employment situation is not great. And unfortunately, we did not get the November employment numbers because the government shut down, and therefore the non-farm payrolls was not officially reported. And so there's some uncertainty, even with the Fed, in knowing what those numbers are. Now, jobless claims are pretty even, but when you look at AI is taking away many, many, many jobs. And people are losing their jobs. I'll give you an example. Verizon, my former company, is laying off 13,000 workers, their largest single layoff in history. When I was there, we had 120,000 people. Now they have 100, and they're laying off 13 to go to 87. And their new CEO is taken over for Hans. Hans was a 5G guy. He was a former, I believe it was either Ericsson or one of those European telecom companies who came on, and he was there when I was there. And he led this development of 5G expansion for Verizon, because 5G is going to be their core product, right? And I was doing cybersecurity on the 5G network then, so I was in tune to all that stuff when I was at Verizon. But their new guy is the former CEO of PayPal. So what does that tell us? It's happening. AI is taking jobs. The tech companies are moving to AI and laying off, and then they're bringing on financial types to monetize that existing infrastructure. So the tech companies are monetizing the move into AI now. The problem is you have AI blowing up the stock valuations to where a lot of analysts are saying we're in a bubble and that bubble is coming down. And that was like the first big move into AI. There may even be a little bit of a tech crash coming, because that bubble is going to come undone, and there's going to be deleveraging the economy, or deflation in the economic output, not in prices, but in the economic output because of AI. So there was a boom into AI. AI itself is lowering the employment situation to where the Fed's now split and they don't know what's going on. They don't know whether to ease or not to ease. But these tech companies are monetizing their assets now in AI. And so we're in a changing economy. It's kind of like going from the Industrial Revolution to the internet age. And now we're going from internet or tech age into the AI driven age. And so there's going to be these transition periods and this uncertainty about what's going on in the market. As I look at the economic data that is available, there's actually been a nice little manufacturing boost. And the reason is because manufacturing basically been turned off for a while. And now it's kind of ramping. It's not bringing us back to where we were, but it's a nice little bump. And so you have a bump in manufacturing, a come down in tech. And in addition to that, the dollar's rising. Well, how come the dollar's rising? Because the Japanese and European markets are weakening, partly because the US market strengthened a bit. The dollar strengthened, and so that's weakening the other economies. Their currencies are falling, and so therefore their economic output is worth less. And not only that, but Germany is in an existential crisis with relation to production right now. And Germany is really one of those big growth engines in Europe. So, and all in all, what I just said was deflationary economic output. AI is now replacing a lot of human. So people are spending less in the economy as that's happening. The tech companies are moving more to pure technology based and trying to monetize that. And world economies are really suffering right now because of deflation. And so you have sort of this currency battle going on. And it's one of those transition periods before we're going to have something big happen. And a lot of the analysts, again, are going back and saying gold's going to rise, which tells me they're expecting some continued worldwide deflation. We're just in a transition period, a lot of different stuff going on. But, if you're out there trying to get a job, it's a really tough labor market right now. And that's the main reason the Fed is thinking about easing. Now, if they ease long term, that's very bullish for gold. Short term could actually be a little bit bearish, but long term bullish for gold because of inflation and that type of thing, debt levels. Real quick, I'm sorry, I didn't mention this, but with Europe and Japan, in addition to the currency challenges, they're in debt collapse. They're in the early stages of debt collapses right now. According to their analysts, their mainstream analysts are saying we're in a debt collapse right now. The debt is just overwhelming everything. And in fact, if you look at corporate America, the debt is overwhelming. And that's why AI is replacing jobs. They took on so much debt that they had to deleverage. And the easiest way to deleverage is let go of people. And now that AI is starting to replace jobs, that's what's happening. In a nutshell, we're in a stage before the big crash of where the debt burdens around the world are really forcing the hand of companies and causing all sorts of issues with sovereigns and their currencies and things. And AI is a temporary boost. But when AI takes over, there's going to be less internal spending in the economy. So you're going to have all the sorts of trade imbalances and things. And it's what I predicted would happen in 2025, 26 is where you have this very volatile move in the markets as a lot of this gets worked out. And I think eventually it leads to a big crash, because even though we have AI, it's not going to make up for the debt loads. It's just something they're putting into place really because of the fiscal problems. And, it's going to be hard times, I think, for people around the world who don't have savings, specifically don't have gold and silver.
Deflation with a rising gold price, is that unprecedented, or is that is there historical precedence of something like that?
There is historical precedent. Gold price can rise in either a deflationary or inflationary environment in terms of growth. And you have to separate out deflation and inflation from an economic output and a monetary. One is economic, one's fiscal. And so we're having inflation of prices, even though we have deflationary output. In fact, there's so much money in the world chasing fewer goods. That's one of the reasons prices are continuing to rise and GDP is not catching up. And this is the Austrian explanation for the business cycle. What von Mises and Hayek and Hazlitt and all of those guys said is coming true. We're now getting to the almost to the Minsky moment, the melt up moment, and then the crash. And we're getting closer and closer to that point. Hence the movement into AI, digital currencies, and things like that, because the powers that be want to absorb. The fiat currencies are going to die off, and they want the solution to be the CBDCs and stable coins and things, so that they can completely control monetary flows. They think to prevent the business cycle. It's not going to prevent the business cycle, but the business cycle's got to crash before the introduction of those. And yes, gold price can go up in any case in deflationary, inflationary environment. If you go read a lot of Austrian economists' account of gold price during periods of economic inflation and deflation, gold can go up in either case. In fact, gold pretty much goes up all the time, excepting periods in which you have these economic booms in which people go to bubble assets like stocks, bonds, real estate. Those are always short term. They typically go in 4 to 10 year cycles, and then you have your 80-year cycles, and then you have your 250-year nation state cycles. So going back to cycles that we talked about before in your program, you're having the culmination of this extended 15 to 16-year business cycle, which is longer than normal, the 80-year conjunctive wave cycle and the 10 or 50-year nation state cycle. But we're also looking at the collapse of 700 years of bond issuance dating back to the Middle Ages, the collapse of that bond market, and the first rise in overall worldwide bond rates, concerted rise in 700 years, or any sort of debt rate in 700 years. So this is a much bigger cycle as well when you're looking at it from a debt perspective. So it's the reset. It's basically the reset. This is going to be a sort of a violent stage and a working out of a transition into this more AI and technology-driven economy. But debt's got to be cleared out. Jobs have got to be lost. Currencies have got to crash. And that we're kind of in the throes of that, not to the big piece of it, but we're getting there. And so when I look at it really long-term, it makes sense. Short-term, it's confusing. Long-term, if you look at what's going on, it makes more sense. But Austrian economics is a very important piece of understanding that. Keynesian economics, they taught us, and micro and macroeconomics in high school and college will not explain what's going on.
So this 700-year bond cycle that you're talking about, so you're saying from 1300 AD up until present day, we've been in a secular bull market in bonds. Is that an accurate assessment?
Yeah, now bonds are different now than they were then. So they're all different types of debt issuance, but all sorts of debt issuance in terms of back then, the way it was done a little bit differently than now. But if you look at rates, it started like 16 to 18% all that time ago. And you've seen a steady decrease in the overall rates across the world for any type of debt instrument, sovereign or otherwise. And then about last year, that started reversing on a worldwide basis, and not temporarily. This has been going for a while. And this is the first really extended time at which bond rates around the world have been going up. Why? Because it's seeing risk, right? It's seeing risk in the system, so the rates go up. You have to have a higher rate to attract more money to take on debt, because the debt burden is so big, and because it's across the world this time, and it's become electronic, and everybody invests in bonds as an asset. There's so much money flow into it that it's blown up this bond bubble. And so to get more and more people in, first of all, people are laden with bonds they don't want anymore. So you have to raise interest rates to attract more. And there was a 2-year auction that came out a few days ago. This is reported on Zero Hedge, that did pretty well, but it wasn't, there were signs and indications that the rates are having to rise to get those bonds out, even on the short term. And so a couple of years ago, we had the reversal of the 10 and 2-year treasury. It inverted, and it looks like it's not there yet, but it looks like we're on path to that inverting again, which just means more short-term risk, meaning more likely to have bond collapses. And again, the mainstream media is reporting that in Europe and Japan, and that's eventually going to work its way around the world. And that's what we're seeing, the reversal of that 700-year, bond cycle, where rates came down and just kept coming down. And if you saw it in the aughts from about, mid 2000s to about 2020, 2021 during the pandemic, rates on houses steadily went down to where you could almost get them for free, relatively speaking. And then that reversed, and we haven't come back down. And the easing policies of the U.S. have not brought that back down. And now it's around the world, and you're starting to see this bond collapse, and it's going to be a worldwide bond collapse, essentially.
Are these cycles symmetric in the sense that it took us 700 years to get to this point? Mm-hmm. Should we also anticipate a 700-year, I don't know, downtrend in bonds from here? Or is this something that will be a lot more, I guess, faster than the ascent was? Because typically in any bull market, you take many years moving up, but only in an instant can you come crashing down. Is that going to be the same case with bonds from your analysis and from what you've read?
Yeah, the crash comes faster. So the crash in bonds comes when interest rates continually rise, because a couple of factors. People, if you're holding an existing bond, the face value is inverted from the rate. So as the rate goes up, your face value to recover that in the secondary market goes down. That's why banks fail, because they hold bonds as assets. And when interest rates rise and those bond values fail, they fall below certain thresholds, which if you looked at like Silvergate and some of those other banks that failed a couple of years ago, there was a run on the deposits of these banks because the rates were rising, causing bond valuations to fall, causing current and long-term account ratios to fall, causing bondholders of banks to panic and say the bank's going to go under, and they pulled their deposits. And of course, a couple of banks did. And then of course, the FDIC came in with their insurance scheme, and there were bailouts on, they didn't bail out the depositors, they bailed out the investors. So the depositors still lost their money. Investors, they took haircuts, but they weren't washed completely. And I will also say this, a feature of the digital system is coming as they want to get rid of bonds permanently. So because it's a limitation on the system, the digital system uses two pieces. It uses the bank bail-in and confiscatory laws in Dodd-Frank to adjust the money supply by taking money straight out of your bank account if they want, or devaluing it with a push a button on your bank account, as well as taxation. So the IRS will become more important because they're going to tax excess out of the economy, excess. And they also are a two-tier system in CBDCs where the international trade, what they call like the sovereign or the top layer CBDC, is a trade between the central banks of each region. But if they want to issue the common currency to the people, they can do that as many times as they want. So you could crash a currency, reset it, and it does not affect international trade flows. And so when you look at all those features, they're going to be less reliant on debt in general. The debt model is going to change. So when I say the 700-year bond market is going to collapse, it's the collapse of an asset class that's not going to come back the same way ever. And that is, by the way, by design.
What does that portend to the stock market then?
Well, the stock market always or typically crashes after, because the bond markets typically most people consider bond market investors smarter. They're kind of the canary in the coal mine. So yeah, the stock market's going to crash. I mean, the valuations are ridiculous. You've got tech companies that never make any money. They're trading at stupid valuations, and that's a bet on the future. But what people don't understand is that future is taking away jobs and therefore spend. And so somebody tell me how, if there's less spend and there's more money coming into corporate America, somebody tell me how a lot of these companies are going to stand up to those valuations. And I really don't think that they are. And I think we're at a cycle change of the way the system, the fundamental way in which the currency and debt systems work. This fiat debt system that blew up in the mid 1800s, and then of course in 1913 with the Fed, is breaking, and they have the replacement in place, and it's going to be different. So we're changing over from that fiat bond currency system into something different. And so eventually they want all the bonds go. They don't care. They want to get rid of all. That's why they printed up until this point, because at the end of the day, they're just going to hang the consumers with it. And by the way, that's why the central banks have been buying so much gold to recapitalize their balance sheets, because what's going to happen to gold when all this goes off? Straight up. Why is Trump saying we're going to revalue the gold but hadn't done it yet? They're waiting on the value to go, and they're going to recapitalize, and it's going to help them address the issues, gold and Bitcoin, address the issues in the sovereign wealth fund with the debt, and allow hopefully some version of the dollar survive in an electronic format. That's something I've been worrying about for 5 or 6 years. It's a complete switch over of a system. And if you're looking at the future through the lens of the past, you're not going to understand or see it. And that's why a lot of people don't understand or see it. But if you read the white papers from IMF, the BIS, the central banks, and you listen to them speak in public, they're telling you what is happening. Very interesting that Christine Lagarde came out and said that these fiat currencies are weakening. She thinks the dollar is going to weaken long-term, and that gold is really, she says it's not Bitcoin, it's gold. They know, I'm telling you, the central bankers know it's gold, not the private currencies. And they're going to capitalize their digital systems with gold. Christine Lagarde gave the plan out.
When was this again?
This was just a few days ago. She said it. It was,
okay.
I don't remember what conference I was reading it on Zero Hedge. And they quoted her and had a video. And she's saying gold is the ultimate safe haven. It's not bonds. It's not the dollar. They know. She's a central banker. They know what's coming. They're going to recapitalize with these assets, and they're going to push us into digital currencies. And they're starting to talk about fiat currencies and debt as an issue because they want to paint that as the problem to replace it with what? Solution. Problem, solution. Problem, fiat debt system. Solution, digital system. And the gold will be in the central banks backing it up. And they don't want privates to hold a lot of gold, with the exception of China. And China and India want their citizens to hold gold. The Western world does not. The technocrats do not want you to have a lot of gold.
Why does China want their citizens to hold gold?
Because they can basically take it up if they need to. So we've been having this argument on social media very recently, well, not an argument, a healthy debate, I would say, amongst a lot of gold and silver market followers that have been talking about how much gold China has. And I wrote an article for JM Bullion back when I was writing for them 2 years ago. And I supposed, based on trade statistics, mining statistics, shipping manifest, that kind of stuff, about how much gold China had. And they, for the last 30 years, have kept almost all of it internal. And I think at least 25,000 tons. Some people are saying 30, 40, 50,000 tons. It's just not on the central bank balance sheet. It's in the sovereign wealth fund. It's held by the people. And if China wants to get gold from the people, they can get gold from the people. You know, there's ways to do that. They can make it incentivize to get the gold from the people by using currency. And if they're using a currency which ultimately has less value, it's a great trade for them. You know, Russia's doing the same thing, the oil for gold trade. How did Russia stabilize the currency after the sanctions? They pumped out a bunch of oil to China and others, and they traded it in gold. And what that did was that put a floor under the price of their currency and a floor under the price of oil, and it brought a lot of gold in. Russia's recapitalized their sovereign balance sheet using oil to get around the sanctions to use what? Gold. And so they know that gold will be the center, and they know they're going to the digital system, but the fiat and debt system is going to collapse, and they know it, and they're going to make it the enemy. They're going to make it the cause. They're going to demonize it to get us in the digital system. That's the solution.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020. What's their plan with Bitcoin? Because Trump talks about this Bitcoin reserve, you know, the entire administration talked about the Bitcoin reserve, but it's kind of counterintuitive. But if you were actually planning on having a reserve of some sort, the last thing you would do is alert the public that the government was it was going to put a bid on that asset. Is Bitcoin a red herring?
Well, this is where it gets funny, because Lagarde's saying it, but you don't see the U.S. politicos saying it, because the dollar is the reserve currency. So Lagarde's calling out the dollar. She has incentive to do that, right? There's all sorts of reasons for Europe to demonize the dollar. Everybody's going to demonize the dollar. It actually helps them in the long run. It seems counterintuitive, but if everybody demonizes the dollar as the problem, then what is the solution? Oh, we've all come out with this electronic system. And they actually want people to use Bitcoin now because they can use it to pay off debt. That's why Bitcoin's in the sovereign wealth fund. And in the scheme, that they wanted to do was they were going to recapitalize gold, buy Bitcoin, use Bitcoin to pay off a lot of the treasury debt. And they said it in black and white. And then was it Judy Shelton that came out and said, we need to issue treasuries in gold, but we don't want that because the treasuries blow up. It sucks gold, into the US government, and it extinguishes the treasuries, which would seem like a good thing, but we want the people to own the gold. So you see the playbook is there. It's obvious. You have to understand you have to understand Austrian economics. One of the things I'm doing is bring on Austrian economists into my program. I just had one on a couple of weeks ago. I'm working with the Mises Institute to bring more because we need to go back to economics. It's hard to understand gold, digital currency, debt flows, currencies, all this crap if you don't understand a proper accounting of economics. It's not a science. It is human action, it's human behavior. Mises and Hayek had it right. And if you look at the world through the lens of Austrian economics, it makes more sense. But if you don't have a solid basis, if you haven't read the books, if you haven't taught yourself, you will not understand it. And that's the key. So I'm going back on my channel and going back to basics and saying, let's teach people Austrian economics so they can understand how all of this stuff works. And it's worthwhile to understand that. It really is for people to understand it. Austrian economics, understanding the debt system, all of that will lead you to an understanding of everything that's going on, essentially. And it's too much to talk about on one show, but I encourage people to go read, to go to Mises.org or Mises.org, Mises.org, and just start reading. Tons of fantastic content out there. Books you can buy off their bookstore, articles. It's great. They have a Guns and Butter YouTube channel. It's got some really good content. People should go follow that really and educate themselves. And you have to, Danny, you have to look at the long term, and you have to look at cycles, and you have to understand all of that to be able to put these pieces together. Just looking at a current bond chart or just looking at the Bitcoin price or the gold price is not going to get you there. You got to understand how we got here, why we're here, and why they want to take us to the next system, and how they're going to demonize the old system. Yes, they're all in support of the old system until they don't need it. And then they need to set it up to be the fall guy so they can get the new system in place.
That is, you just sparked something in my head. What if it is by design what if they actually do want to kill off the Republican Democrat paradigm system? Maybe they do want a third party to come into play in 2028, because then they effectively retire the legacy system, and whoever the third party nominee is, or whatever the third party stands for, will represent the brand new digital ID, system from there on out.
So you hit on the interplay between, and it's too long for this show. We won't be able to go full again, but I'll give you just a taste of it. When you look at economics, you cannot separate it from culture and politics, especially when you understand it through the lens of Austrian economics. Economics is a cultural phenomenon. It is human action. It's not science. That's BS as taught in schools. It's BS. When you understand culture and politics, you understand economics and vice versa. When you put them together, it's economic history, economic science, political science. Okay, political economics, if you will. You used to have classes on political economics. Where did they go? Yes, they're going to kill off a lot of parts of the legacy system. Now we could get into conspiracy and talk about one world government, one world currency, which if you look at the one world government in a way, you have your regional governments. You and I talked about that last time. Well, don't you need to align the economic aspects and the political and cultural aspects so that this currency, they're going to have different currencies, but the system will be the same, managed regionally by technocrats. Don't you also have to marry that to views in culture and politics? Yes. And of course, they're going to burn down the old system. They want everybody hating Trump and Biden and everybody. So there's an excuse to push people into the new system. And what was Hitler? If you look at Hitler's playbook, he was a National Socialist. People say he's a Marxist, and that's a big load of baloney. FDR and his press manufactured fascism out of nothing. Before FDR, there was never fascism, was not a word. And they did it to try to gin up the war effort against Hitler. Hitler said Nazi means translated National Socialism. And it was a version of Marxism in which they wanted to turn into a religion. In Hitler's words, socialism is his religion. What is religion? It's the biggest cultural movement in history. It's the most powerful. You cannot control by legislative fiat. So to get people to do what you want, you can't just legislate it. That's a political battle. You have to create a culture. And from culture comes what? Politics. Politics emerges from culture, not the other way around. You can't change the culture with politics. You can affect it, but it's culture that designs politics. And that was Hitler, what he was trying to do and what he said in public. There are news articles about it in the American press and the German press, and people don't learn that in school. It was a religion to him to change the thought processes around the system that Hitler wanted to implement, which included economic policy, but he was going after culture first. And a lot of the culture wars we see now, which involve religion, think about the Christian movement and how many people like Russell Brand have come out and said, I'm being baptized. How many people have come out and said, I'm turning to Christ? I'm not trying to turn this into a spiritual program, but there has been an awakening because people have figured out this is not the system we want to go into, and it's cultural, not just economic. And you've seen, now you're seeing the culture wars. There is the destructive process of culture, religion, politics destroying itself. And what is the solution to be that? Problem, solution. They're going to destroy the existing paradigms and they're going to create a new one. And it's going to be kind of along what Nazism was, but more on a global scale, I believe.
So what's the path forward? If they want us hating the legacy system, and there's a lot of justification to hate the legacy system.
Yeah, exactly.
So what do you do at that point? Do you just defend the legacy system? How do you resist?
Well, I think what you do, and I said this on another program, another gentleman had me on last week, and he's a new YouTube channel. He's great. And I'm going to rebroadcast that on my channel this week. So anybody wants to see that. You have to have action. You have to get culturally and politically motivated. Like my role with Citizens for Time, I'm not on the board anymore, but I'm like the Texas legislative chair. I'm going to focus on Texas, and we're going to go down there and try to do some things around the economy and stuff like that. The problem in Texas is NASDAQ is moving down here, or at least they're moving part of their trade down here. Governor Abbott just kind of signed that deal. So now we've, and people, and it was like, well, that's great for the economy. Texas is doing great. They're moving a major exchange down here, at least a portion of it. And it's like, yeah, but you're bringing the bankers in our backyard. Right in the backyard of Austin? Do we want that? Do we want the bankers with all their trillions of dollars influencing our political scene? So you must get active. Your resistance is not just buying gold and silver. I want people to understand this. You cannot economically survive a cultural collapse. Ask the Jews, the hippies, and anybody that got persecuted by the Nazis how well that worked for them. It didn't work so hot. Money by itself doesn't buy you out of risk. It buys you out of some financial risk, because they can just confiscate it and throw you in jail if they want to. Look at what's happening in the UK. We're throwing people in jail for just speaking their mind on social media. This is going to feed into what we talked about. Here's some headlines. Judge ends Sacramento's utility decade-long police data sharing. Sacramento was sharing electronic records with the police. This is illegal, so that they could ferret out who was using most electricity to find people who were growing marijuana. That was the ruse, although in a lot of places it's legal. And really what it is doing is electronic surveillance of electricity usage. Here's another one. The Algorithm Accountabilities Act threat to free speech. This one is two senators, Democrat and Republican, are putting a bill into Congress in the U.S. to say that we need to monitor the algorithms of popular social media so that certain content or misinformation doesn't get promoted. They're trying to politically control what? Culture. They're trying to change the zeitgeist. They're trying to change what we all talk about through political action. Here's another one. Europe calls it censorship law neutral, but creators and diplomats see a clear grip in online speech. EU digital omnibus promotes fewer cookie banners, but expands digital IT and loosens privacy rules. UK government resist program monitors citizens' online posts. British lawmakers who love censorship and hate freedom. So on, and UK police make 10,000 arrests over quote unquote offensive online speech, even though, that's not even what's offensive online. This rush towards censorship is because they know when the economic system collapses, what happens. What was the lessons of the Chinese? The lessons of the Chinese were the emperors came down when people didn't have food, and then they would revolt, and then emperors were overturned. What about the French Revolution? Okay. What about the Renaissance? What was that? It was books to allow people to know the freedom. And then, you had the revolutions and things like that, which eventually led to our revolution. Historians have always said that the French Revolution led to the American Revolution. The printing press led to free thought, free speech, and the creation of a republic, of a true freedom in mankind for like the first time in human history. And they know that this time their playbook is to censor and to change culture and therefore change politics, because they see the rise of people fighting back. So what you must do is not just buy gold and silver. You must go to your state and use lawful methods, by the way. Don't do anything stupid or violent. Never. All you're going to do is get yourself in trouble. Be lawful, be respectful, but state your opinion. Let your lawmaker know what it is and speak to your friends about it, and stop being uncomfortable about talking about this stuff. So many people, they'll watch this in their house and they're looking at somebody watching me. They're watching everything. Forget that. I mean, they can track everything you do online. You might as well go full bore into it. You're not going to have your little prepper compound and survive. I'm sorry, it ain't going to happen. You're not just going to have a stack of gold and silver. If you want to survive, you better get your ass out there, excuse my language, and get active. Okay, that's why I'm continuing to do stuff on sound money legislation. And that's why I continue to do videos and all that kind of stuff. People need to be educated, but people need to get up off their butt and say something. The power of the people is always there. It's always been there. It's just people have to get active, right? And I'm imploring people to get active. You can stop a whole lot of things just by showing up and saying, I don't want that. Especially if you do it in person, especially at the state level, they listen. My experience in Florida was they listen. They listened to us, and we got legal tender passed. It's not perfect, but we got a base, and we can take it from there. I was also sitting side by side with the Christian Family Coalition of Florida, talking about other things like boys and girls bathrooms. And we were very vocal about that. We were talking about societal values and how to let the leaders of our nation know what we value, so they don't just take us into this system. And we have to fight those cultural changes. The reason so many people got herded into concentration camps and Nazi is because people did not speak up. Okay, I'm not saying they're all going to herd us all into concentration camps. I don't want to go off the deep end. I'm just saying, if you want your freedoms, you got to fight for it. That's it. And it's not just through gold and silver. It's through using your mouth and your mind and going and speaking the things that you have to manifest what you want to be in this world. You have to speak about it. And that's what people got to do. I mean, we're at the point people got to move. You got to move and do something.
Point well made, Rob. Anything else you want to talk about before we sign off here? Powerful note.
Yeah.
To close things out on.
Well, I just want to wish everybody a very happy Thanksgiving. Even though I just painted this very bleak picture of the future, we still have the ability to, we're the restrainer on government. We are the restrainer on all of these things. We have the power. But I wanted to say that I'm very thankful, first, for coming on your channel and you giving me a voice. Thankful for you coming on and giving a voice to so many people and building that up. You've done a wonderful job. Thankful for all the things I have in my life, and thankful, for a country we can live in and talk about this stuff. We still have those rights. And, I just want to give thanks for everything that we have. And, when things are at their bleakest is when, you're going to see the light, when the sunshine's going to come through. So we'll get on the other side of it. Just be thankful for what we have, but just remember, when they gave us, Ben Franklin is a famous quote. A reporter asked him, a lady said when he came out at the convention, what'd you give us? And he said, a republic, if you can keep it. Mm-hmm. Keep it implies we have responsibility towards that. So while we give thanks, let's, take that thought and extend it out to doing stuff, not only for us, but for our neighbor, and protecting our rights and protecting the things that we hold dear. And it's not just on the battlefield in some foreign country. It's in the political and cultural battlefield right here in the United States, in our backyard.
Well put. Thank you for coming on, my friend. Where can people find you if they want to see more of your work?
Freedom Report on YouTube, Twitter, and now on Substack.
Excellent. Links to that is all down below, guys, so be sure to check it out. And if you got value out of this podcast, drop us a like and comment, go Rob, go, in the comment section. If you agreed or disagreed, either way, let me know. I do, in fact, read all the comments. And by liking and subscribing and commenting, doing all the YouTube stuff, you do help us in growing and getting this message boosted in the algorithm. So it may not seem like much, but a little bit does go a long way. And then if you'd like to support us even more so monetarily, then consider becoming a member on my Substack at capitalcosm.substack.com to get access to all of my content early and ad-free, and sometimes uncensored when the YouTube overlords may not like the content. So with all that said, I'll catch you guys next time, and a happy Thanksgiving ahead. Bye.